Hello, this is Jason Shapiro. Today is April 17th, 2023, and I'm Jason Shapiro with Crowded Market Report. Today, I thought what I would go over is kind of how I like to monitor my portfolio and monitor my performance. And really what I'm monitoring is my process to make sure that it's not losing robustness, because clearly if it is, I have to figure out what's wrong, what I have to change, what's going on, or is it just a random bad time? And we do go through streaks of good times and bad times that fall outside of what we would expect. And it's kind of important to know, hey, is this just one of those bad times, or is this thing losing robustness? And how do I know that, and how do I monitor that? So what I did here is, this is a spreadsheet of the trades that I've made this year. So we're talking about 3 months and 2 weeks. And just for the record, all of these trades are on right there on the newsletter that gets produced on Crowded Market Report, where I put, hey, these are the trades that I put on last week. These are the trades that I have on. This is what I got stopped out of. It also looks forward because it says these are the trades that are set up to do coming up once we get sort of market confirmation. And then live on our Discord page, I talk about, hey, there's market confirmation here, I'm buying or selling this, or here's where I'm getting stopped, or whatever. And not only me, but because we have some really good members on our Discord page, we're all kind of monitoring for this news failure market confirmation event on the markets that I mentioned are set up to trade in the previous week's newsletter. So the point being, not only are these the actual trades that I've made, but they're all right there on the newsletter to see and to try and take advantage of, or if you feel like that's how you want to approach it. So having said all that, we have 19 trades this year, one of which came in the year on. So I marked that to sort of the December 31st close. And then 18 new trades over the course of the year. And just looking at the general statistics, now I know, because I have over 20 years of trading this process, I expect about 37 to 38% of my trades to be profitable. And I expect the return on those trades to be 4 to 4.5 times the losers, which clearly you need to do. If you have less than 50% of winning trades, then your winning trades have to more than pay for your losing trades. So that's kind of my expectations going in. I average about a 15% a year return on a 7 ball, and my max drawdown is 5%. So those are my expectations. So let's see how we did. Well, out of these 19 trades, 11 are winners and 8 are losers. So that's higher than my 38% expectation. So obviously I have no problem there. There's a few reasons why that could be. It could just be this happened to be a good streak, which is most likely. It could be, what I would hope is that maybe I'm getting better at this as time goes on, so my winning trade percentage can start to increase. That would be wonderful. Not counting on that, but we just kind of had maybe a good run this quarter, so our percent winners are a little higher right now. Now, does that mean that, I'm going to revert to the mean, and therefore I'm going to have a whole bunch of losing trades coming up? I don't really think that's how statistics work. It's just like if you're flipping a coin and you come up with 7 heads in a row, that doesn't change the odds of your next flip. Your next flip is still going to be 50-50 heads or tails. And I see it the same way. Just because a higher number, and I'm higher than 50% here, which is pretty high for me, has happened, doesn't mean that the next trade to me, in my eyes, is a 37 to 38% chance of winning. That's how I see it. So looking a little further out, because I think I've had, for this beginning of this year, a higher percentage winners than expected, my return is higher than expected, which makes sense. So so far this year, it looks like this has put up just about 20 to 21% return on the year, which is obviously in 3.5 months much higher than I expect. Now, the way I calculated this was, I just did $1 million account and I took a 1% risk per trade loss, and that's how I figure out my sizing. So in other words, I know my entry, I know my stop. I want to risk 1% should I get stopped, so I know how much to put on per trade. Now in my trading, I actually risk 70 basis points per trade, because that ends up, I have found, that targets my vol of around 7 to 8% a year that I'm looking for. And then truthfully, because I know there's going to be some slippage on some of these losses where I get stopped, I round down. So I'm really probably doing 65 basis points a trade, which is, again, why my returns are not 20% on this year. They're closer to 11% so far this year, which again is quite frankly, very high for me for a quarter. But I'm happy with that. Obviously, there's no problem there. But back to this. So with the 1% stop loss per trade, it's up a little bit over more than 20% on the year, on 11 winners, 8 losers. And I think the important thing to realize with this is that 5 trades made 80% of those gains. Okay, and that's the most important part about at least how I do this, because I expect my winning trades to be less than 50%. I need to sit on the winners and ride them and have big gains on a few winners. And that's really what it is. As I always say, 20% of my winners will make up 80% of my gains over time. So I can't just get out of them because I have a winner and, oh, my last trade was a loser, I need a winner to make this up. No, that's all irrelevant. The market doesn't care about my P&L. I have to sit, let the process work, and make these big gainers. And you can see, like, some of the big gainers, for example, out of a $208,000 P&L, almost $52,000 came from this one trade, right? And $55,000 came from this one trade. And this, I remember, was the 10-year. And the reason it's so much is I think that the move was pretty big, but also the entry was pretty close to my stop. So I was able to get decent size on. And then, I mean, in this 10-year example, you remember what happened was the banking crisis happened, and 10 years out of nowhere just shot up. And this was only in a 3-week period. Most of my trades are 2 to 3 months. This has been in 3 weeks that trade lasted. And, it was a good, 55 into 2, it was a little more than 25% of my entire P&L just based on that one trade. Okay, and so that's why it's so important to get these big trades. And I think that's really the main point here that I get out of all this is, well, first of all, are things staying robust? And the answer for this quarter at least was yes, both on a percent winning, which was better, both on a P&L, which was better. I did not draw down 5% in this whole thing, which is good. I think that this portfolio, which is, an extra, 30% leverage compared to mine, drew down 6%, and that's using daily returns. We haven't had a losing month so far, knock wood, this year, but I think it drew down about 6%, which means my portfolio drew down, around 3.5%. So that all kind of fits within my expectations, right? The P&L higher than expected, I'm not going to argue with that. And the fact that a few trades are making up the bulk of the P&L is pretty typical. And it's something that I love to see because I love to pound it in my head whenever I'm sitting on a winning trade and be like, just follow the process. I know this has a nice trade. I know it has a nice P&L right now, but that has nothing to do with your process. Stick to your process, get out when you're supposed to, ride the winner, and let it work. So that was kind of my idea for the day. I'm more than happy to hear any questions or comments on this. And we would love to see you at the crowdedmarketreport.com. All right. And I hope everybody has a good, profitable week. Thanks.